If you've been paying any attention to the markets lately, you've probably felt it. There's this massive buzz around gold and silver. Prices are going through the roof, and it feels like everybody's talking about them. So why now? What is going on here? Okay, let's get into it and figure out what's really driving this.
And you know, it's not just the big shot investors. This question, right from a Reddit forum, totally gets to the heart of it. You've got regular people wondering, hey, should I be getting in on this? Am I missing some crucial piece of the puzzle? It's that feeling of, wait, is there something big happening that I need to know about?
And that is the billion-dollar question, isn't it? What is behind this frenzy? Well, it's not just one simple thing. It's this incredible mix of green technology, high-stakes global politics, and just plain old economic anxiety all crashing together at the same time. So let's break it all down, and we're going to start with silver. Right. So when you think silver, your mind probably goes to jewelry, maybe some fancy silverware or old coins. But honestly, its most important job today has nothing to do with any of that. It's all about powering our future. For most of us, this is what silver looks like. It's pretty, it's valuable. But that's only one side of its personality. The real action, the thing that's driving its price, is happening in factories and on production lines. Let me show you the numbers. This chart really tells the story. Just look at that huge purple slice, 55%. Over half of all the demand for silver in the entire world has nothing to do with investing or jewelry. It's for industrial use. That completely flips the script on what silver even is. So what kind of industry are we talking about here? It's the green revolution. See, silver happens to be one of the best electrical conductors on the planet, which makes it absolutely essential for building things like solar panels and electric vehicles. So as the world makes this huge push for clean energy, the demand for silver is just exploding. And this chart right here shows you the direct result of that explosion. All those orange bars dipping below the zero line, that represents a market deficit. It means we're using way more silver than we're able to mine. For 3 years straight, we've been in a shortfall, and if you look at the forecast for 2024, that gap is only getting wider. It's a classic supply and demand crunch. And this isn't just some temporary blip either. It's actually set to accelerate. Just look at this forecast for solar panel capacity. It's projected to grow by 125% by 2030. That's insane. And every single one of those new panels has to have silver in it, which just puts even more pressure on a supply that's already struggling to keep up. So that's the industrial story for silver. It's a tech story. But for gold, well, the main driver is less about manufacturing and a whole lot more about a high-stakes, behind-the-scenes shift in global power.
Right now, the biggest players buying up gold aren't you and me. They are the central banks of some of the world's most powerful nations, and they are buying it by the metric ton for some very, very strategic reasons.
For decades, the US dollar has been the king of currencies. The whole world ran on it. But that's starting to change. When a country like Russia had its dollar assets frozen because of sanctions, it sent a huge message to the rest of the world. And that message was, holding US dollars comes with a risk. So, in response, central banks are now snapping up gold to diversify their holdings and rely less on a financial system that, at the end of the day, they don't control.
Now, to really get why they're choosing gold, you have to understand this key financial idea, counterparty risk. It sounds fancy, but it's actually pretty simple. When you hold another country's currency or their government bonds, you are fundamentally trusting that country to keep its promises. But what if they change their mind? What if they can't pay? That's the risk.
And this is where gold is in a league of its own. It's what's called a hard asset. Its value isn't based on a promise from any government or any bank. It's a physical thing. It's sitting in your vault, and nobody can just print more of it, and nobody can hit a button and freeze your account. For a central bank that's worried about global tensions, gold is the ultimate financial insurance policy because it has zero counterparty risk.
And that idea, that concept of a safe harbor, brings us perfectly to the third major force at play here, and this is the one that really ties both gold and silver back together. It's their ancient role as a shelter in the storm during times of economic fear.
So check out this chart. This is the gold to silver ratio. All it does is track how many ounces of silver it takes to buy 1 single ounce of gold. That straight line across the middle, that's the long-term average. And as you can plainly see, we are way above that average right now. To a lot of investors, that's a signal. With gold hitting all-time highs, they look at this and think silver is relatively cheap, and that it has a lot of room to catch up. This quote here from the Journal of Banking and Finance just sums up the classic thinking perfectly. When the stock market is choppy,
When inflation is chewing away at your savings, or when the future just feels, well, uncertain, investors have historically run to the perceived safety of precious metals.
And let's be real, there is no shortage of uncertainty to go around right now. We've got nagging fears about inflation and a possible recession. The stock market's been all over the place. You have concerns over massive national debt, geopolitical conflicts heating up. Oh, and yeah, a little thing called a U.S. election cycle. All of these things create an environment where people are actively looking for a safe place to park their money.
And hey, this isn't just a vague feeling. You can actually see it in the data. These charts show how silver's price relates to the US dollar and to interest rates. Now, notice how often those orange bars are in negative territory. That shows what's called an inverse relationship. Basically, when the dollar zigs, silver often zags. And that is exactly what investors want in a hedge. They want an asset that zigs when the rest of their portfolio is zagging.
Okay, so we have an industrial revolution in green tech. We have a geopolitical power shift playing out. And we have widespread economic anxiety. Let's try and put all of these pieces together.
So to recap everything, there are three huge, distinct forces all working at once. First, you have the industrial boom, which is a massive driver for silver. Second, you have the geopolitical shift, which is driving central banks to hoard gold. And third, you have that general economic anxiety, pushing everyday investors towards both metals as that safe haven.
And here's the main takeaway, the single most important thing to understand. Any one of these drivers, the industrial, the geopolitical, or the economic, would be enough on its own to move prices. But what makes this moment in history so unique is that all three are converging. They are all happening at the exact same time. It's a true perfect storm for precious metals.
And that leaves us with one final, really fascinating question to think about. When technology, international politics, and investor psychology are all screaming the same thing, get into physical, hard assets, what does that signal about the bigger picture? What might it be telling us about the future of money itself?